Hello, everyone, and a very warm welcome to this week's cryptocurrencies update for Friday, April 12th, 2024. Is the Bitcoin correction continuing? Is the question. Corrections are always very hard to forecast exactly because they don't really have to follow many hard rules like a impulse where, for example, wave 4 cannot overlap with wave 1 and wave 3 cannot be the shortest wave. But a correction can be single, double, ABCs, WXYs, you name it. So discover the power of the Elliott wave as we track this correction, because the price action still looks corrective. And as you remember, and I'm going to scroll through this real quick, this is for your eyes later. We were tracking the 2021 analogy, and there we had a rally out of a one-day decline for about 48%, and then a 30% drip, and then a 100% rip. So I still think we're following this analogy, though on a different time frame. Excuse me. Here we had just a 3-4 day rally and about 5-6 day decline, but the current price action is taking longer in time, but not so much in price. Also here you see a similar drop, 14.5% versus 18.5%. Then we had a about 24-25% rally versus 48%. And currently we're in a about 20% correction once again. It should bring us back to the early March lows. So as you can see, so far, the price action is sideways consolidation after the rally that started here January 22nd. So this looks like a bull flag to me. As I explained in my emails, if we get a bull flag with a low somewhere around 60,000 one more time, then we have a flagpole that starts here at about 38,000, going to 74,000, which is $36,000 in length. Then we have this flag, right? You can literally see this flag developing. This is the flagpole right there, right? This is the flagpole. And then this is the flag that is attached to the pole, right? You can see it right there. It's the flag. And then we add the flagpole to the breakout. Not that one. There. So from about, say, 59,000, we're going to add another, what did I say? 36,000. So that gets us, of course, to 86, 87,000. That's the minimum upside target on this bull flag. And that matches, of course, once again with what we saw here in 2021. So this was the 1-2, 1-2 setup that we were tracking, 1-2, 1-2. It doesn't look right, I must admit. This here, this rally from the 2 low does not look like 5 waves, but like 3. You have 2 up days, a down day, 3 up days. That in my book looks corrective. That looks like a ABC instead of a impulse. So then it's better to go to our preferred Elliott wave count that we completed indeed this ABC. And we're now in this gray wave C. As you can see, we have not been able to break on a closing basis above the third warning level. Third warning levels are really important. That really means, all right, you have to pay serious attention because we're just one step away from confirmation. Instead, we're trying to break below, as you can see here, the 50-day moving average. We haven't gotten there yet, as you can see, but if we do, I think we can target again into this green target zone for a more complex wave 4. Ethereum already has confirmed it's more complex wave 4. So in this case, Bitcoin will likely follow suit, though it is lagging. Normally it's leading. That's fine, but we'll get through Ethereum in a moment. So this is then the bigger picture at the wave count for Bitcoin, and that we have completed this black wave 3. It's a count. It's one of the counts we're tracking. The next count it will show you as a green wave 3. Potato, potato, it means a 4 and a 5, a 4 and a 5, as you will see the other wave count as well, with some other upside potentials. The main takeaway message here is that Bitcoin has essentially never topped unless we saw negative divergence on some of these technical indicators, right? The only time we topped here was with a maximum money flow. That's about it. Negative divergence, negative divergence, negative divergence, negative divergence. No negative divergence yet whatsoever. Merely extremely overbought conditions. Also, please remember, the higher we go, the less overbought things will get. All right, this is the hallmark of a third wave of a third wave, right? This is primary 3 of cycle 3, etc. So this is a third of the third wave. And normally when you get this overbought, this is the money flow indicator, selling is left to do, not buy. As you can see here, price was fully outside its upper Bollinger Band. As you see here, when that happens, you eventually get a correction back inside the Bollinger Band and another rally higher to set up that negative divergence, which will cause the next bear market. We've reached the ideal wave 3 target zone, which is anywhere between 138.2 and 161.8. We should now be dropping to this ideal target zone, anywhere between 62,000 and 56,000. Let's see how that looks in daily chart frame, right? We said 62 to 57,000, 56,000. Look at that, picture perfect, right? Picture perfect. So this is then a green wave 3. Here we label it as a black wave 3, potato, potato. Why is it potato, potato? Because as you can see, we use here a different degree fourth wave low at the 2022 low, major 4 versus a cycle 4. This one is 2 degrees higher than this one. Then we have intermediate 1, intermediate 2, minor 1, minor 2, minor 3, minor 4, and of course, primary 1, primary 2, major 1, major 2. Okay? Both wave counts count to much higher prices once this correction is over. Contingent on holding above our critical levels, which in this case is about 25,000, with a serious warning, of course, below 38,000. But this green wave 4 can retrace all the way back to the gray wave 4. It is possible. But again, below that level increases the odds the bull is over. And if we go below 25,000, somewhere out there, the bull is definitely over. And my job is to warn you if that's going to happen or not. And so far, I'm not seeing it. So far, this price action looks like a nice flat. 3 down, 3 up, and we'll soon see 5 down. 1, 2, 3, 4, 5. So then we did the math on how high can we go. As you can see here, this green wave 3 topped somewhere around the ideal 161.8% extension. We got 68,137. And how high did we go? To about 75,000. So off by 10%, somewhere around there. Pretty good. Green wave 4, red wave 3, red wave 4, red wave 5. But depending on the wave extension this is going to target, it's either going to be 108,000, potentially 140,000, or even 280,000. Okay? But let's focus on these two. The 300% extension is simply 1 plus 1 plus 1. It's the length of 1, and we add another length of 1 and another length of 1. The 108,000 is, according to Fibonacci, measured from the wave 2 low. So you can see we start to get some nice confluence here. This starts to look pretty okay, right? You can make it 110,000 and then 140,000. So that's what we're going to gun for. Hasn't changed a bit. We originally had 106,000, but back then we had the wave 1. That number was from the wave 1 here. But if we move it a little bit higher, of course, you extend it twice, then the number at the end will be a little bit higher as well. Right? So if you place the number 1 here, you see my cursor versus number 1 there. You see the difference? That one, yeah, it's probably 1 or 2,000, but multiply that by 3, and you get a different number. So we still think we're going to top somewhere later this year, potentially late next year. But given how sped up the current market is, we might expect the top already this year and then potentially a 2-year bear market. So this is Ethereum. And as you can see, Ethereum has now confirmed this C of 4. So now the downside risk is minimal versus the upside reward. Lots of positive divergence developing. So this looks good. Ethereum might soon be done, but I'd like to see 5 waves low. So let me put that on the chart for you. So then we have a wave 1. And I start to like it. This is kind of the price action I was looking for to get us resolved. And up to yesterday, yeah, you kind of go like, I don't know what this is. This is just sideways. So we want to see a good movement. And again, I know most of you are long-term investors. That's why my time frame is not on hourly charts and stuff. but something like this is what I'm looking for, right? 1, 2, 3, 4, 5. Okay, something like that. That would be nice. That is then wave C. Top 2 for this wave C. Excellent. Bigger picture wise, we have the 1, the 2, the 1, the 2, the 1, the 2, the 3, the 4. We should now soon start this gray wave 5 or green, to complete green 3, green 4. Again, here is just a slight different labeling. I call it here green wave 4, and here is gray wave 4. But we should see 2 more sequences with the potential here for wave 3 to about 7,800. That's the 1.618 extension. 10,679, I believe, is 200%, and then 13,598 is about the 300% extension. So this is potential. This is not a given, but you can see how far this can still go. Okay, so we could have a double from current levels, about a quadruple from current levels till the final. That makes about sense if we look, for example, at what Bitcoin did in 2021, right? 100% dropped, and there again it tagged on another 50%, right? Going here from 28,000 to 64,000 is about 2.5 to 3 times higher. If we would do that for Ethereum, right, 2.5 times higher, you get easily to these numbers. So we'll keep those upside targets in check, and as you can see, all we do is consolidate sideways above the Ichimoku cloud. Also, Ethereum tops only on negative divergence, and we haven't seen that whatsoever in the current setup. So if we close red for the month, we should see another rally for this wave 3, greenish, and then a 4. So we start to see more negative divergence, right? So we get something similar as we saw here, 3, right? 4, 3, 4. So you get double negative divergence. Wonderful. How is ETHE doing? Well, it's getting more complex, and that the gray wave 4 starts to allow for, and actually I must update this a little bit better. So this is then A, and this is B, and this is C for this wave 3, and then this is wave 4. It's all ABCs. So I think we are in an expanding ending diagonal for this wave 5, and the downside target remains about the same. There we go. There. Now, if Ethereum is going to move a little bit higher or lower over the weekend, right? A little bit lower, we get a nice resolve for ETHE. I cannot know it's going to be a expanding ending diagonal. Okay, that is impossible to know. It looked like a contracting ending diagonal. It morphed into a ending diagonal, but then as a expanded version, very critical. That you understand that we cannot forecast how things exactly are going to move from a corrective pattern. Okay, corrective patterns have much less regularity than impulses, but it should complete black wave 4 soon, and then we get the black wave 5 to new uptrends high underway. So I'm starting to turn slightly bullish on ETHE, just not yet. GBTC, again, here we have a complex red wave B, most likely underway. After 3 down, expect at least 3 back up. Well, this 3 is now morphing into another 3, so we kind of get a double zigzag, all right? 5, 3, 3, something like that. So this looks more like a flat, and the B wave itself was also a flat. So this is super tricky, and we should now be in this red wave C, somewhere around there, to complete this wave 4. And from there, we're going to get this wave 5 probably into the 85 to 95 range. Okay, so that's really all I want to kind of get my hands dirty on. The big boys, the main ones. The miners, they look like they want to go to much lower levels. I'm not too keen and enthusiastic on their rather uninterpretive price action. So I'm going to not touch on those for now. I'm going to stick with what is loud and clear, And this still looks corrective to me. I still want to see lower prices. And again, we might stall here just at about 55. That's it. Okay, we don't have to go to about 50. So let's see what we're going to get over the next few days. But it looks like there's more downside left in this one before we move higher. So we have Bitcoin analogy. The 2021 to days, 2024 is taking weeks, but still the same type of pattern. The 1-2-1-2 setup is essentially off the table. I don't see it. So we're going to focus here on this wave C of 4 being underway. And I can also here pencil in a little bit more granularity, a little bit more detail, and that we should now be in this wave 3 of C lower there. Something like that. That would be ideal. But again, we don't have to go below the A wave low here. Okay, we don't have to. Why? Because then we have a what is called running flat. We don't have to have a flat or a expanded flat. It would be pretty perfect, but it doesn't have to be. Again, bigger picture-wise, I have 0 warning signals that the top is in. Nothing at all. So if we see warning levels being broken to the downside, you'll be the first to know. But for those that are still gunning for much higher prices, I see nothing in the chart currently that will raise even an eyebrow. If anything else, this is probably a good time to buy for the next leg higher. My hedge fund is already doing that. We've had some small trades over the last couple of weeks. Not much to brag about, but hey, profits are profits. And again, if you feel like, hey, you know what, I really like you guys to take care of it, we can do it for you. Gains will most likely be not as great as individual investing. Why? Because we're dealing with other people's money, and then safety comes first. We don't guarantee rocket returns, but we guarantee no boom, no bust. So I really want to make sure you understand that once you deal with other people's money, your risk appetite is becoming less. If it's your own money, you can do whatever you want with it. But if it's other people's money, but we do guarantee a more steady eddy return, as most of the time we trade individually, it's a little more volatile. So if that's your thing, please contact me and we'll take it from there. Otherwise, again, I see 0 warning levels. Things are progressing quite nicely. We've been anticipating this wave 4 for a while. It's taking its sweet time, but this starts to look good. And as I said, it starts to look like a nice bull flag, even for Ethereum. If we have a completion here at around 3,000, then we have a bull flag here from about 2,000 to 4,000. That's 2,000 points. And from about 3,000 at 2,000 points to get you to 5,000 already. Not too shabby. Okay. And that should then get us close already to this wave 5 of 3. 4, 5, 4, 5, done. All righty. Again, no critical warning levels to the downside have been broken. Once they do, and if they do, you'll be the first to know. There's no guarantees in this market, but for now, I'm not seeing it. So I can't say that, oh my God, we're going to crash. If we do break them, you'll be the first to know. That's, I think, a fantastic insurance premium to have, because you'll be ahead of the game compared to 99% of all the other people. Take care, trade safe, and I'll catch you all next week. Bye.